In today's presentation, we're going to take it back to basics with a real estate IRA. I'm Renika Lightborn, Business Development Specialist. I'm also an active self-directed IRA investor. If you have questions or would like to schedule a consultation, feel free to give us a call at 800-425-0653 or visit our website at advantaira.com. So what is a real estate IRA? It's a self-directed IRA that gives you control to invest in what you know and understand. In this case, it's real estate related assets. You have control over your retirement funds. You have the control over the investment decisions. With self-directing, it really allows you for true diversification. In addition to investing in real estate, you can also use those IRA funds to invest in other alternatives like notes and mortgages, private placements, precious metals, foreign currency, and so much more. So why do people choose to self-direct? You may choose to self-direct for any number or a combination of reasons. One, it can be a new source of capital for you. If you have money that's sitting in an old 401k, you can absolutely use those funds to purchase your next investment property so you don't have to tap into your personal savings or take out a bank loan. Another reason, you may be experiencing the stock market fatigue. You're simply tired of the volatility, the ups and downs, or you're just unsure about being in the market. A lot of investors look to real estate as we know it always holds some value. Lastly, the tax benefits, which is why so many people choose to self-direct. The benefit of having those rents or profits flow back into your IRA, tax-free or tax-deferred, depending on the type of account that you have. So if you're in a higher tax bracket or you simply don't want to deal with those capital gains personally, you can elect to do that fix and flip project within your IRA and not have to worry about those taxes. Speaking of the different types of accounts that can be used in a real estate IRA, really any type of IRA can be self-directed, whether it's a traditional or Roth, or if you're self-employed, you can use a SEP, simple, or a solo 401k, which offers you great flexibility. Certainly any former employer plan can be self-directed, whether it's a 401k, 403b, TSP type plans. Some lesser known accounts like the health savings and educational savings account can also be self-directed. The main thing to remember is the different annual contribution varies among the different accounts. And with a Roth, the distribution is tax-free at retirement. So how do you move money into your IRA account, or how do you fund your account? There are a couple of ways in which you can do that. One, you can make that annual contribution. Another option is by a transfer. So if you have an existing IRA elsewhere, you can elect to move funds back and forth as many times as you like. There's no personal tax liabilities to you. Advanta will submit that request on your behalf. Another way you can fund your account is, using a former employer plan. You can roll those funds over. You would have to go through the process of initiating that request. So when it comes to self-direction, there's really a universal list of options available to you. Specifically for real estate investors, you can use IRA funds to invest in whichever strategy you're most comfortable with. So if you're a single-family home, if single-family home is your preferred strategy, whether you're going to hold it for a long-term or short-term rental, or you're going to do fix and flip projects. Other investors like the low maintenance that come along with storage units or mobile home parks. You can elect to become the bank by investing in notes and mortgages for passive income, or look to pool funds to partake in multifamily units, large apartment syndication, or commercial deals. Really, there's a long list of options available to you when you're looking to buy real estate in your IRA. The IRS, however, do have a few rules and restrictions in place that you must follow. First is the prohibited investment, and there's only two types of investments you cannot purchase in your IRA. That's life insurance and collectibles. Collectibles being anything like antique, wine, art, stamps, anything of that nature. For real estate investors, the other guideline that you have to consider is the actual unrelated debt finance income tax, which is also referred to as UDFI. So UDFI comes into play if leverage is involved when purchasing real estate in your IRA. So for example, 123 Main Street's available for $100,000. You decide you want to put down $20,000 as a down payment from your IRA, and you have to take out a loan for the remaining $80,000. That loan has to be a non-recourse loan, meaning that you personally can't guarantee that loan. The only recourse the lender would have would be to foreclose and take possession of that property if the loan's not repaid by the IRA. You fix up the property, 20% of the profits will flow back into your IRA without any tax liabilities to you. The 80%, however, would be subject to that. 80% will be subject to the UDFI tax. As that loan is repaid, that tax goes down. Obviously, anytime when it comes to tax-related questions, you're always encouraged to confer with your CPA or a tax professional. The other restriction that the IRS has in place is, who your IRA is not allowed to transact with, so prohibited transactions. And your IRA is not allowed to transact with any disqualified person, which includes yourself as the IRA owner, your spouse, your parents or grandparents, so lineal ascendants, also your children or grandchildren or any spouses of your children or grandchildren, so lineal descendants. Your IRA is also not allowed to transact with any business or entity that's owned or controlled by a disqualified person. And when I say transact, I just simply means your IRA is not allowed to be on the opposite side of the table from a disqualified person. Some examples of prohibited transactions: your IRA owns real estate and leases it out to your daughter. Think opposite side of the table, where the IRA is the landlord, the daughter is the tenant. Prohibited, it's therefore not allowed. If your IRA buys real estate, first and foremost, you can't live in that property, but also too, you're not allowed to do any of the work. So if your son, is a contractor by, profession, he's not allowed to do any of that work. No disqualified party is allowed to do any sweat equity on that property. As the IRA owner, you can oversee the project, you get to decide what needs to get done, but you would have to hire it out to a third party or a non-disqualified person. Another example is, a father lends money to you or your son. Again, think opposite side of the table with borrower or lender. A final example, your spouse IRA owns real estate and wants to sell your IRA a portion of that property. It then becomes a prohibited transaction. The IRS do allow your IRA to partner with anyone, that includes yourself, that includes, any other disqualified person. And when I say partner, I just means IRAs are sitting on the same side of the table. So in that example, the husband and wife could have purchased the property together at the very beginning of that transaction and have been fine. When partnering with a disqualified person, keep in mind the percentage of ownership cannot change throughout the life of that investment. So what options do you have in terms of real estate investing? Again, it's based on your personal preference. There's no right or wrong. We know real estate investing means many things to many different investors. At Advanta, we have clients that fit across all of the different options. So again, if you're a passive investor and you're looking to invest in, say, syndication, or you're going to, act as a private lender for wholesalers, where you get to get a property under contract from a seller and then assign that contract to an end buyer. A lot of investors do wholesaling as an option to start out with a smaller account to kind of build up that cash reserve to possibly do bigger deals. Another popular option when it comes to self-directing is tax lien or tax deed investing. And this is where you get to buy a lien by paying the back taxes that's owed on a property, and then you get your money back plus interest and or the possibility of owning that property outright. So with tax lien or tax deed investing, it varies state to state. So as always, you are encouraged to do your due diligence to make sure you understand the applicable rules. Another option is joint venture partnerships. This is more so a collaborative effort. Do keep in mind that there are different ways you can structure JV deals, but this is where you have a group of people that come together to do real estate deals, which kind of leads me into my next slide of, using your network. So with self-direction, it not only allows you to invest in what you know, but also whom you know, which really goes back to the adage of your network equals your net worth. So lean in, build your team. It's definitely a contact sport. Get connected with your local RIA group. The person in that group could potentially be a partner on one of your next deals, or be able to, help with mentoring or add some value to your business. When buying real estate in your IRA, there are a couple key factors you do have to consider and keep in mind, whether it's a rental property or a fix and flip, or it's vacant land. First, the property is purchased and titled in the name of the actual IRA. That name and convention would reflect as Advanta IRA for benefit of, which is John Smith IRA's account number. The funds to purchase that property will come from the IRA, and of course, all of the income generated from that investment whether it's rental or it's, actual sale, it'll flow back into the IRA tax-free. A friendly reminder, again, your IRA have the ability to partner with yourself or other individuals. As for paying the bills, any related expenses will be paid by the IRA itself. You would simply submit an invoice to Advanta. You can do that by logging into your online portal with us. At Advanta, we're very quick, so we're very responsive in that we can get that bill paid the next business day. It's not required, but you have the ability to hire a property manager to help with, managing that property. The property manager would be responsible for collecting the rental checks and paying any bills associated with that property. Thereafter, that property manager will then send the remaining funds to be deposited into your IRA account with Advanta. So as for the upkeep and the repairs and maintenance of the property, again, you can't do any of the work. No disqualified person can put sweat equity into the work. So even if it's something as simple as mowing the lawn or painting a wall, you're not allowed to do any of the work. You have to hire it out to a third party. You get to oversee, you get to decide what needs to get done, but you can't do any of the work. If you have a rental property, you have autonomy. You have to go through the process of actually, selecting and qualifying that tenant. Advanta, as the administrator, would sign that lease on behalf of the IRA and also receive those rental checks to be deposited into your account. As the IRA, the IRA owner, you get to negotiate the term of the actual lease, but also too, you're the point of contact if the tenant has any issues. Again, you can choose to hire a property management team to assist with the overseeing of that property. So we're going to transition and take a look at a couple different case studies when it comes to purchasing real estate in your IRA. In this case study number one, we have a rental property. So we have John. He has an old 401k from a previous employer that he's looking to move over into a self-directed account to where he can buy a rental property that's in his neighborhood. So the process for John, first and foremost, would be to open and fund his Advanta account. At Advanta, we don't have a list of investments for our clients to choose from, so it's John's responsibility to go out and find that property, whether he's going to go door knocking, driving for dollars, working with an agent, or online. John finds the property. He's going to put in an offer to purchase that property in the name of his IRA. Additionally, he works with his assigned account manager at Advanta to fill out the additional purchase authorization form. John always have to read and approve all of the documents to give consent. Advanta will then work with John's preferred closing agent or closing attorney to make sure everything is properly vested and titled in the name of the IRA. As the administrator, Advanta signs the documents, the closing documents on behalf of the IRA, and then subsequently wire the funds to purchase the property. For record keeping, Advanta holds the deed and any related documents associated with that transaction. And then finally receive all of the incomes and pays the expenses associated with John's rental property. So again, John's strategy is rental. He's going to rent the property for $1,200 per month for 2 years, where his IRA receives $28,800. After 2 years, John decides he's going to sell that property for $170,000, which the IRA netted $50,000 in profits. Because John made that investment within his IRA, that entire $78,800 in profit actually flowed back to his IRA without any tax liabilities. Had John made that same investment personally, once he sold that property, he would have been subject to capital gains on that $50,000. And then now John has a little under $200,000. He can move on to his next project to self-direct. In case study number two, we have partnering on a real estate deal. So we have Paul and Linda. They're part of a local REIA group. They decide they want to team up and partner together. They each have $100,000 in their IRAs. Again, it's Paul and Linda's responsibility to find the property. Their price point is $150,000. Paul and Linda has autonomy. They get to decide how much work they want to put into to get the property rent ready. In this scenario, it's $20,000. Again, Paul and Linda understand, they've done their due diligence. They understand the local rental market. They're going to get $1,500 per month in rent, which will flow back into their respective IRAs. So the steps for Paul and Linda: first, they'll go through and open and fund their IRA account. Again, they find a property. They'll put in an offer to purchase that property in the name of both of their IRAs. They fill out the additional purchase authorization forms. Both Paul and Linda have to read and approve and give their consent. Advanta then works with that closing agent to ensure all of the paperwork is properly titled in the name of both Paul and Linda's IRA. Advanta, as the administrator, signs those documents on behalf of the IRA and then wire the $150,000 to purchase the property. For record keeping, Advanta receives and stores all of the actual closing documents and then finally receives the rental checks and pays any expenses associated with that property from both Paul and Linda's accounts based on their direction. So when partnering on a real estate deal, there's other things to consider. In this scenario, the deed will actually be titled as tenants in common. So we have Advanta IRA, FBO, Paul's IRA as to 50% interest, and Advanta IRA, Linda, her account number as to the other 50% interest. So the actual percentage is solely based upon the amount that's contributed between the two accounts. In this case, it's an even 50-50 split. So they'll both their IRAs will both share in the actual income and the expenses associated with that property. If Paul and Linda were considered disqualified persons to each other, do keep in mind, again, the percentage of ownership cannot be changed throughout the life of that investment. So the first two case studies that we looked at is if you were purchasing property directly within the IRA. Case study number 3, we're going to look at what's called checkbook control. Sometimes you may hear it referred to as an LLC IRA. And checkbook control just means it gives you the ability to have greater control over those retirement funds. The IRA is actually the owner of an LLC. You get to act as manager, or another person can act as manager. As manager of that LLC, you have the ability to write a check, pay a bill, sign a contract on behalf of the LLC. When using and setting up checkbook control, in this case, we have Joe. He's going to go through the process of opening and funding his account. Again, he can do it online. He's going to decide how he wants to fund his account, whether it's going to be from an existing IRA via a transfer, or he's going to roll over funds from his former employer plan. At Advanta, we're pretty quick, so we can get his account open within that 24 to 48 business hours. The next step for Joe would be to, open up the LLC. He gets to choose which state he wants to open up that LLC in. He gets to decide what he wants to name the LLC. With the articles of incorporation, instead of Joe listing himself as the owner, he's going to list himself as the manager, or he's going to have another individual listed as the manager. The main thing that Advanta needs is the actual operating agreement. That's something Joe can draft himself, or he can work with his CPA or attorney to assist with drafting that operating agreement, which is actually going to show that the IRA is the 100% owner, the IRA is the member, and for naming conventional, it'll show Advanta IRA, FBO, Joe Smith, IRA account number 800-123. That lets the IRS know when this LLC purchase of property is actually tax sheltered because it's owned by Joe's IRA. The next step, Advanta will sign that operating agreement on behalf of the IRA. Ultimately, Joe always have to give his consent, so he'll read and approve everything. Advanta will then issue a check from Joe's IRA to fund the LLC. Joe has that check. He can go to his preferred banking institution. He's going to open up a checking account or a bank account in the name of that LLC, deposit those funds, and now he has checkbook control to where he can go and enter into a contract to buy real estate in the name of that LLC. Also, because he's the manager, he'll be signing the closing documents. And then moving forward, depending on the type of investment that he has, if it's a rental property, the tenants will send the rental checks to Joe to be deposited into that LLC's bank account. Joe ultimately will also be responsible for paying any expenses associated with that property. So if he has property taxes, or he has insurance, or he has to pay, some maintenance or contracting fee, Joe will pay it from the actual LLC's bank account. A few quick tips just to remember with checkbook control. Again, the IRA is the 100% owner of that LLC. You can act as manager, or have it, a third person act as manager. As the manager, you have the authority to write a check, pay a bill, sign a contract. If you're considering the LLC structure or feature, definitely consult with your attorney or legal advice to assist you with it. And just really quickly before closing out, I do want to highlight and talk about Advanta and who we are. So we've been in the business for nearly 20 years. We're one of the nation's leading self-directed administrators. We have well over $1 billion under our administration as we work with clients nationwide. At Advanta, we separate ourselves in so many different ways, one of which is providing our clients high quality concierge service. For you as a client, that means you have a dedicated account manager, a direct point of contact, someone who's there to guide you every step of the way. Also, too, our commitment is, providing an educational platform that's second to none. We host recurring webinars and seminars that features guest speakers and experts. Also, to local Lunch and Learn networking events. Our webinars are recorded, so you can always access that information or those recordings on our on-demand video library, or check out our YouTube channel. Certainly, I would encourage you to visit our blog. It features, great content, any and everything relating to the latest news and trends with self-direction as a whole. In terms of getting started, Advanta, we've really streamlined that process for you in 3 simple steps. Step 1 would just be, opening your account, filling out the application, which can be done electronically. You'll have a point of contact who can answer your questions and walk you through each step. Step 2 is actually, funding your account, whether it's going to be by a cash contribution. Are you going to transfer funds from an existing IRA, or are you going to roll funds over from, say, a former employer plan like a 401k, a 403b, or a TSP type plan? And then finally, step 3 is start investing. What alternative assets do you want to invest in? Is it real estate? Is it notes and mortgages? Is it private lending? With self-directing, you get to decide what is it that works best for you and your IRA. If you have questions, so you want to talk about your exact scenario, or you're looking to get started today, feel free to give us a call at 800-425-0653, or visit our website at advantaira.com.